What the stock market looks like when you've lost everything in it, a story from the inside. Your account balance doesn't say red, it doesn't say down, it says zero. And somewhere in the back of your mind, you already knew this was coming. You just told yourself you were the exception, and let me take you back 18 months. You're 26 years old, you've done everything right, read the books, listened to the podcasts, watched every video about compound interest and index funds and dollar cost averaging. You have a spreadsheet, you have color-coded tabs. You talk about your portfolio at dinner like it's a third person at the table. You've turned money into a personality, and for a while, it works. Your portfolio hit 6 figures for the first time on a Tuesday afternoon. You screenshot it. You send it to one person, just one, but you send it. That number lives in your chest like a second heartbeat. This is where the story actually starts, not at the bottom, at the top. Because no one tells you what happens to your brain when you've been right for long enough. No one explains that winning creates a biological certainty, a genuine neurological shift, where your past good decisions start feeling like proof your future ones will be too. You don't think you're gambling. You think you figured something out. And for a while, that distinction feels completely real. So you start moving things around, not dramatically, gradually, a little less in the boring index fund, a little more in the sector that's been screaming. You read a thread at midnight, credible sounding, specific, confident, and by 1 a.m. you've convinced yourself this is research. By 2 a.m. you've made a move. You fall asleep before you can second guess it. 3 weeks later, you're up 40% on that position. 40% in 3 weeks. Do you know what that does to a person? Not their bank account, their mind. That return doesn't feel like luck. It feels like confirmation. You replay the decision, the research, the 1 a.m. certainty, and every single replay makes you more sure you found an edge. This is the trap, and you are already inside it. You concentrate. That's the word investors use. It sounds sophisticated, almost restrained, but what it actually means is that you take everything you've built and put it in fewer and fewer places because you trust yourself more and more. You're not diversifying away from your conviction anymore. You're doubling into it. Meanwhile, the market starts making sounds you don't recognize. A bad earnings report here, a sector rotation there. You look at your portfolio, still green, and you call the noise, but something shifts in your behavior. You start checking more. Once a day becomes twice. Twice becomes 6 times. 6 times becomes you excusing yourself from a conversation, walking to the bathroom, opening your brokerage app in a stall. You tell yourself you're being responsible, you're staying informed. You're not staying informed. You're self-medicating. Then the first real drop hits, maybe 15% in a week. And here's what nobody tells you about that moment. Your first instinct isn't fear, it's offense. Like the market did something to you personally. You feel wronged. And because you feel wronged, you don't sell. Because selling would mean admitting you were wrong, and you haven't built the internal architecture for that yet. So you hold, you wait. You reach for the word every investor uses like a prayer. Long term. But long term is a philosophy. You're using it as a painkiller. The next drop is different, bigger, faster, and something shifts. There's a moment, maybe 4 seconds long, where you see the number and your body understands before your brain does. Your hands go cold, not metaphorically, actually cold. And in those 4 seconds, you have a choice. Act on what your body just told you, or let your brain talk you back into stillness. You let your brain win. You tell yourself this is a test, that the market punishes weak hands and rewards those who stay. You've read that sentence 1,000 times. In that moment, it sounds like wisdom. What it actually is, and you won't understand this until much later, is a story you're telling yourself so you don't have to feel the specific humiliation of having been wrong at scale. 3 months pass. Your 6-figure portfolio is now worth $40,000. You don't tell anyone. You open the app less and less. Not because you don't care, but because you care so much that looking at it physically hurts. You start using the word long-term differently now, less like a strategy, more like a eulogy. And then it goes to zero. Not literally. One position does, spectacularly, in a single trading session. But the overall number, after the fees and the tax implications, and the quiet selling you finally do in numb, mechanical silence, it is effectively zero. Years of discipline, years of 10 p.m. research sessions, and skipped vacations and deferred gratification. A spreadsheet with color-coded tabs, gone. Here's what happens next that no podcast ever prepared you for. Nothing. Life continues. The sun comes up, you make coffee. In the specific silence of a morning, when you have nothing to watch, nothing to check, nothing to protect, that silence has a weight to it. It's its own kind of grief. You sit with it. You have no choice. And somewhere inside that silence, something begins. Not a recovery plan, not a new strategy, something more fundamental. You start replaying every decision, but differently this time. Not to find where the market went wrong, where you did. And for the first time, you look at them honestly. Not as a smart person who had bad luck, as a human being whose brain, under the specific pressure of winning, started lying to you in ways that sounded exactly like intelligence. You see the overconfidence, you see the concentration, you see the 1 a.m. sessions that were never research, they were rationalizations. You see the moment the drop felt like offense instead of information. You see yourself in that bathroom stall calling it responsibility. Here's the thing that breaks you open. You had read a book about behavioral finance 6 months before all of this. You highlighted the parts about overconfidence bias. You understood the concept. You could have explained it to someone else, but the concept meant nothing. Nothing compared to sitting in the wreckage of your own specific, personal, irreversible application of it. This is the thing that cannot be taught. Risk isn't a number. It isn't a percentage next to a fund description. It isn't a volatility rating or a standard deviation. Risk is the experience of watching your own mind fail in real time, under pressure, with your money, your actual money, your time, your identity, on the line. You cannot learn what risk does to you by reading about what risk does to people. Those are different sentences. They produce completely different knowledge. You rebuild, slower, quieter, with none of the personality. And you make one change that sounds small and is actually enormous. You start treating uncertainty as the default, not something to be analyzed away. You used to invest to be right. Now you invest as though you're probably wrong. It changes everything. The position sizes, the diversification, the way you respond to drops, not as offense, not as a test, but as information. Your portfolio is not what it was. Not yet, maybe not ever, on the original timeline, but something else is there now that wasn't before, a kind of financial clarity that has nothing to do with returns. You can feel risk now, physically, in a way that makes you a completely different decision maker. You've been to the place where the number says 0, and you came back and you know exactly what it cost you to earn that education. Here's the only thing you need to take from this. Every piece of financial knowledge you acquire before you lose money is theory. Every piece you acquire after is scar tissue, and scar tissue is stronger, but you have to earn it. You cannot borrow it from someone else's story, not even this one. What you can do right now, before the market teaches you its own version of this lesson, is act like you already have it. Smaller positions, real diversification, brutal honesty about why you're making each move and for whom. Because the most expensive thing I ever bought was the certainty that I knew what I was doing. And I still think about that screenshot, the 6 figures, the Tuesday afternoon. I think about it every single time I'm about to be sure.